As inflation continues to rise across the globe, African investors are seen to be moving their money from the banks and into real estate investments to curb some of the inflationary effects. We had a conversation with Mark Pearson, CEO at Barron & Cabot, to help us break down the 2023 money trends.
Globally, inflation's up. We're paying for the pandemic now, and Africa's no exception. Africa, unfortunately, seeing double-digit inflation, probably some of the highest inflation globally. And what that's meaning is that investors are moving their money as quickly as possible into pounds and dollars, and what's considered more stable currencies. Which is a smart route. We're seeing it a lot, and we've seen over the last 2 years a huge spike in that, and really because investors know over the next couple of years that inflation is going to keep going. So to be able to keep the value of your own currency or your own money that you've saved up, really have to move it into stable currencies that aren't seeing quite as much inflation. So what that's seeing in the landscape is that people are moving their money into dollars or into pounds, and once they move their money into pounds and dollars, it's then about saying, well, look, once we have it in those currencies, are there assets that we can buy to make a better return? So we're seeing a huge influx of African investors in UK real estate, and I think globally, the US is seeing similar sorts of numbers.
And in terms of assets, it seems like stocks and bonds are no longer the safest option to venture into. And so with this, a lot of that money is definitely going into real estate and more tangible assets. What does that look like exactly?
Yeah, absolutely. Look, I mean, it's always been the same. When UK property's always been considered one of the safer ones, a bit like bonds and things like that. Stocks, equities have always been a higher risk class of investment. And it's always the same. When markets look a little bit uncertain, people go back to the more sensible or the lower risk options like assets, like property, etc. So yeah, it's completely normal. This is what we tend to see in these kind of markets. When the markets become very, very easy, people take bigger risks. They start looking at cryptocurrency and stocks and what have you. But absolutely right. At the moment, virtually everybody's looking at assets, for everyone from pension funds, from your major, hundreds of millions investors down to the sort of the everyday man or woman on the street. Looking at assets is generally seen as the safest option at the moment.
And in terms of looking at 2023, in terms of these investment trends, what do they look like? What should we see more of and less of?
Absolutely. So really the year, certainly within real estate investment, when we're talking about the UK, which I specialize in, really what we're looking at is a year of not an awful lot of growth. There's not a huge amount of growth this year in terms of property values. But there's a huge growth in rental yields. So actually the yield return on investments is increasing massively this year because there's not a lot of property being built because borrowing costs have gone up slightly, which means that developers aren't building quite as much this year, which means there's not as much stock in the market, which means that there's a lot of competition for rent. As we get through to the back end of 2023, within the UK, base rates are going to be dropping right back down, and end of 2023, start of 2024 is when we're expecting yields to drop a little bit and see this huge jump in capital growth, so asset growth. So it's a really interesting year, actually. A lot of the more experienced investors are buying heavily this year because last year, they were feeling that the market was getting quite hot. Whereas this year, there's a lot of opportunity. There's really well-priced stock around and not as much competition for some investors. So we're seeing a lot of the more shrewd investors come in, banking property right now, ready for that big jump next year. That's really what we're seeing in the UK market. There is obviously borrowing costs have gone up because inflation's up globally. So there is an extra cost for borrowing. So really, I mean, myself included, this year is about buying stock up for my personal portfolio. Most of our investors are doing the same. Build the stock up, ready to get a bit more growth again, really at the end of the year. So the start of the year is about buying as much as we can at lower cost and discounted pricing.
Right, and surely this rise in demand is definitely going to shoot up the price a little bit more as the year goes on progressing, right? And as you said, the UK is fast becoming the go-to market for basically investment in the world, right? However, there is a general view that it would probably even be more so a question, right? Is it far more cheaper to invest into the UK than it would be to invest into the continent here in Africa?
Yeah, of course, but the goal or the rule of investment is not necessarily price; it's return, and safety of return. So everywhere in the world there's opportunities. There's always an opportunity everywhere. I think the reality of it is looking for consistent markets. Global investors, Asia, Africa, Americas, etc. They look at the UK because it's the number one most transparent market in the world. I mean, this is voted by globes, by countries globally. It's the number one most transparent market for real estate, because it's consistent, And so really, of course, you can buy a cheaper property anywhere, but it doesn't necessarily mean it's going to return more or safer returns. The UK is not really about short term. You're not going to make a load of money in a year or two. I mean, you can do, but it's not really the market for that. If you want to do that sort of thing at higher risks, as you say, look at other markets or look at the stock market. What really UK property is a 5-year and a 10-year growth. The vast majority of millionaires in the UK are made out of property, but they don't do it in a couple of years. They're doing it 5 and 10 years. This is money for our sort of medium and long-term goals, whether that's for our kids, our pension, whatever it is. So yeah, you can get cheaper. Of course you can. There's cheaper investments everywhere. That's not really the reason people look at the UK. One of the benefits of the UK, though, is globally, and a lot of people don't realize this, is you don't have to buy your property with cash. You can use a mortgage. I mean, regardless of where you are in Africa, you can get a mortgage in England, or 99% of people can. So what that does is it means that maybe if a property's £200,000 in England, but you could buy that £150,000 or similar £150,000 on the continent. Well, in actual fact, that £200,000, you might only need to put 30% or 25% of that down of your own money, if that makes sense, because you mortgage the rest. UK banks will lend to you on UK property.
Right. And as we wrap up this conversation, I just want you to give us a few more guidelines on investing within the UK's property market, just one or two as we wrap this up.
Sure, absolutely. Look, the UK market, as I say, is highly regulated. It's all done through lawyers, so you're generally pretty safe. There is 1%, like everywhere, where that you could get into a problem. So the first thing is work with people that you trust, people that either referred or people that are known in the industry and been doing it a long time. Get their advice, take on advice, and work with your solicitors, work with your mortgage providers. Just be safe. I think that's the main thing. Do your research. The beauty of England is everything is published online. So you can see the crime rate, you can see the average growth, the average rent, the occupancy rate in any area you want. So learn that through a company, and then you can invest safely.